Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. All we ask in return, please refer a friend. Today we're going to be looking at the definition of other current assets. As I do in each one of these fundamental analysis tutorial videos, I'll give you the actual definition, and then we'll go on and look at an example and see if I can't give you a bit more insight on how to actually use it. Other current assets are too numerous to list and will vary by company. Other current assets are non-cash current assets which are expected to be liquidated within the next 12 months. Other current assets are listed on a company's balance sheet and are a component of a firm's total current assets. Now let's look at an example. Other current assets can be found on a company's balance sheet. That's where you're going to find them. It's going to be listed under assets because it is an asset. It will also be listed under the current assets because it is a current asset, meaning that it is going to be liquidated in the next 12 months. And it's also a non-cash item because it's not yet been liquidated. So it's that's why all those different terminology is coming from. The other current assets category. Anytime you see the word other on the balance sheet and income statement, you're going to find it in several different places. You can find it here in the long-term section. You'll find here, and then I can show you other places as well. Anytime that you see the word other, what you want to do is go look at the company's financial statement. Go look at the actual company's version, not in this case I'm looking at Yahoo Finance, but you want to go dig into the actual annual report of the 10K and see what they are actually referring to these assets as being. They will give you a list and tell you what they are. And this is of course going to be net. There's going to be several or many different items within the current assets section, and it will be different for every company, and it will vary from one year to the next or one period to the next. Some examples can be anything from prepaid expense, which is actually it's an asset. We'll talk about that later. It could be maybe a piece of equipment or a piece of property or plant that the company is preparing for sale. That's something they expect to sell within the year, something of that nature. That could be in there. You could have just many different things that are in there. So it's important to dig into the actual company's report to see what they're actually talking about. You want to keep an eye on it, make sure it's nothing odd going on there. As long as it's just normal business activities, that's fine. This is important again to note that you can see it fluctuate. Like here you've got 1.7 billion. The year prior you've got or the period prior you've got 3 billion here. So you're going to see fluctuation there as they sell things or different things that can happen. And like I said, there's many different things that can go into here. So it's important that you always, whenever you see the word other anywhere in your balance sheet or your income statement, go and dig into the company's report and see what they're actually listing there. They'll put it for you in the notes section, and they'll actually have very clearly defined as what's in there. It should be noted that other current assets is typically the last item listed under the current assets column here, and after that you get to the total current assets section here, where they simply add up the cash and cash equivalents to short-term investments, and net receivables, the inventory, the current assets, or the other current assets, and then that is the total below on the total current assets. We'll get into it later, but when you're looking at the current ratio, this is the figure you're going to be using when they're going to be actually analyzing all of the current assets. In the situation looking at a quick ratio or something of that nature, you're going to be talking about, in that case, is anything above or anything net receivables or higher. So they're basically not going to be looking at inventory or other current assets. Remember, assets on a balance sheet are listed in their order of liquidity. So the further you go down on this list, the less liquid an item is, and the harder it would be to turn that item into cash, or the longer amount of time it would take to turn that item into cash. So when you're seeing other current assets, again, this isn't something that I would look at. If this was, for example, these numbers were switched and we saw 40 billion here, 1.7 billion here, I'd be a bit more concerned, because I'd want to know, I'd really quickly dig into these the notes in the annual report of the 10K to figure out what the heck this other current asset is that's worth $40 billion, and what's actually the timeline that we're looking at before this thing actually gets liquidated. So this important little element to think about there is whenever you're glancing at those numbers, it's fine to have items there that you can have a good amount of money in there, but just know that they're not as liquid as even inventory. Inventory is more liquid than that. So just keep that in mind, okay? And now you know. Please take a moment to review our disclaimer. The information provided herein is our opinion only. Under no circumstances do any statements here represent a recommendation to buy or sell securities or make any kind of an investment. You are responsible for your own due diligence. To summarize, we do not provide investment advice, nor do we make any claims or promises that any information here will lead to a profit, loss, or any other result. These videos are for educational purposes only.